If you don't know what supplemental property taxes are, or you're confused by how they work, don't worry, you're not alone. I'm going to take you through a hypothetical transaction, but before I do that, there's a few pieces of information that you need to have. The first is that taxes are paid in 2 installments and they're due in April and December. Taxes get reassessed upon resale and they get reassessed at the purchase price, whatever that is. And then each year the assessor can raise it up to 2% per year. Now you can figure about 1.25% of whatever your basis is. It varies from area to area depending upon what the little school add-ons or things, but 1.25% is a good number, and that's what we're going to use for this conversation. The last thing is that when you buy a property, you pay prorated taxes for however long you own it during that 6-month tax period based upon the seller's current basis. So for the purposes of this conversation, we'll use $1 million purchase price and the seller's current basis of $500,000. Now I understand $1 million doesn't get you a lot, but I wanted to use nice easy numbers for everybody to work with. So on $500,000 at 1.25%, your annual taxes would be $6,250. So if you closed escrow with a month left on the tax period, you would pay a little over $500. Once the property gets reassessed, it starts accruing at the new tax basis of $1 million, which would be $12,500 per year. The thing is, the city takes a while to catch up, and sometimes a year or more. And so once they reassess it, they send you what's called a supplemental tax bill for the difference, because the bills that are coming out until they reassess are at the $500,000 price. Whereas you should be paying from the day you own it at the $1 million price. So if it's a year that it takes, you would owe the city $6,250. So you want to prepare to make sure that you don't get caught blindsided. So the first thing you do is we would tell you this is what the owner's basis is, so this is what you can expect for a supplemental tax bill. The other thing is we'll give you the dates that you need to check in with the assessor's office to make sure that the bill gets paid, because you won't get the bill in your name until they've reassessed it under your name. And it is your responsibility to pay those taxes whether you get the bill or not. So it's important to make sure that you get in front of that, because they will charge pretty exorbitant penalties if you don't pay them.